Do you know that our economic system profits when you are not financially educated? We are now in a system called capitalism or a free market economic system. What is actually capitalism? Capitalism is an economic system where the means of production, distribution, and exchange are controlled by private individuals, with government performing what I call regulatory function. Capitalism has a lot of advantages and it also have its own disadvantages. Now, one of the advantages, also one of the advantages of capitalism is that it fosters what I call faster economic development. It encourages what I call provision of alternatives to consumers. It also encourages what I call a healthy economic competition, and there's also availability of of product to the consumers. Then it fosters what we call invention and innovation. But on the other hand, too, capitalism also has its own disadvantages. One of them, or some of them, is that it encourages high level of crime, that it encourages what I call exploitation. Then another one is that it widens the gap between the rich and the poor. And you need to know that the hallmark of the entrepreneur or the business owner of going into business activity is actually to make a profit. So profit is the motive of the business owner or the entrepreneur under a capitalist economic system. Now, how does this capitalist economic system affect us as a common man on the street? Because the system is actually rigged. The system is actually made to make us to not profit from the system. In other words, the system actually profits when we are not financially educated. And that is why I'll be talking about these issues so that you can be able to understand that for you to survive in this economic system, you actually need what I call financial education. You see, the system is actually designed to make the majority of the people to be very, very poor. And the system loves it when you are poor. The system, is happy when the gap between the rich and the poor is actually widening. The system loves that kind of thing. Now, what actually people that are actually profiting from this economic system? I'll be mentioning four of them. I'll be mentioning banks, I'll be mentioning corporations, I'll be mentioning employers, I'll be mentioning the government. Now, how does it relate to what we're talking about here? Number one of them is actually the banks. You see, the banks actually love it when we actually live in debt. And how do we live in debt? We go for credit cards, we go for loan facilities, we go for buy now, pay later, we go for easy buy and the rest of them. When we do all these things, we're actually creating more profit to some people. And who are those people actually providing more profit to? They are actually the banks. So banks actually love it when we live in debt, when we borrow money from them in form of a loan or in form of credit facilities. Then number two, corporations. Corporations also profit when we actually live in debt. How do they profit? You see, when you buy the product of the corporations, you are actually providing more profit to the corporations. You are actually providing more money to the corporations. You will agree with me that as a consumer, we are all consumers in society, and we buy the product of these companies, and there is no way we can do about it without them. So you have to buy their products. When you buy their products, you are making them to be very, very rich. You are creating finances to them. Then government also profits when we are not financially educated. How does the government profit? Government profits when we are actually employees and we are actually consumers. Because when you are an employee, you pay tax. When you are a consumer, you also pay tax. So the tax code or the tax system that is actually operated in a capitalist economic system does not favor the poor or does not favor those that are not financially educated. So the tax code does not favor the employee because they pay more taxes. So either you are an employee or you are a consumer, you are paying more. Then as an investor, the system actually pays them because under a capitalist system, investors actually pay lesser tax. And that's why you need financial education to understand how the system actually works, the intricacies, the secret, the mysteries of capitalist economic system. You see, the system is actually developed or designed to benefit those that are financially educated, to benefit the wealthy people or rich people, and also to benefit the business owners. Building wealth is actually not a rocket science. You don't need to be a genius for you to be wealthy. That's what I always tell people. Some people will tell you that I need to go to school and get degrees and the rest of them. But it has been proven over the years that even those that are actually very wealthy today, most of them are not really very, very educated like that. But what they had is what we call financial education, or what they had is what we call the secret to unlock the mysteries of wealth. So being wealthy or building wealth or becoming wealthy or being rich is not actually a rocket science. You don't need to be a genius for you to be wealthy. So you see, you need to be financially educated, and you should be willing to go through what I call a decade of sacrifice for you to be able to succeed in this economic system called capitalism. So you need financial education, irrespective of your level of education, whether you're a BSc holder or a PhD holder or a master holder, you still need financial education. Apart from the financial education, you must be willing to take what we call financial sacrifices. So for you to be able to make wealth, or for you to be able to build, a very stable financial, system for yourself, or for you to be financially independent, you need, number one, to start earning money. There's no way you can be able to make money, or for you to be able to be rich, if you are not financially educated and if you are not having a job. So you need a job. You need a job. So the first step you need to take is that you need a job. So you need to get something doing. And when you get something doing, when you get that money, you need to be able to manage your money very, very well. In other words, you need what we call financial discipline. Now that you are making the money, you don't need to spend all that money. What we're saying here is that once you make that money at the end of the month, you should be able to divide that money into spending, savings, and investment. Part of the money should go into savings and investment, then the rest should go into spending and savings. I always advise people that once you lay your hands on that money, the first thing you need to do is to remove, number one, your investment, then second, your savings, which is emergency, and the third will be for your spending, what will take you through the whole month. Now, you need investment, and you also need what we call savings, because life happens. Investment will take you through that process when life actually happens. Then your investment is actually what will you retire on, or what you can bank on the future when you are no longer working. So you must avoid liabilities. You need to avoid liabilities, and you need to invest more on assets and grow your wealth. So what we're saying here is that you need to avoid liability, because a lot of us actually, we encourage liabilities. We go for things that cannot add values to our life. We buy things that we don't necessarily need. And at the end of the day, they create dust, or they create space in our environment or in our living space. And these things are not very, very good, because at the end of the day, you're actually making other people to be very, very rich. So you need to avoid liability and invest more on what? On asset, not liabilities. Because liabilities will actually create a hole in your pocket, but asset will build more wealth for you at the end of the day. Now that you have decided to actually invest your money, and money is actually coming in now, what do? Most times when people start making that money and that profit is actually coming in, they usually spend that money. They are not supposed to spend that money. What you need to do is to invest that money to build more wealth, and that's what most of us are actually doing. Because once we open that mutual funds or investment portfolios that we are doing, we always tell them to invest the money back into what? Into the investment. So the more you invest that money back into the investment with the profit and the principal, it means that you are going to be creating more cash flow for yourself at the end of the day. So once the money is actually coming in, you don't need to spend the profit or even the principal like most people always do, because they're always tempted to go back there and take the money. So you don't need to spend that money. What you need to do is to invest the profit into that your portfolio investment. Then another thing that you need to know is that you need to avoid making other people rich. You see, a lot of us are actually making other people rich by what you buy, by what you consume, by what we actually purchase at the end of the day. How do we make other people to be rich? We buy wristwatch, we buy t-shirt, we buy shirts, we buy shoes, expensive things, and the rest of it. We buy expensive cars and the rest of them. You need to know that you're actually making other people to be rich when you buy all these things. Because when you buy all these things, you are actually paying for them. In most cases, people don't even pay for them. They use what we call credit cards, buy now, easy buy, and the rest of them, loans and the rest of them, to purchase those things. And when you are purchasing them, not with your money, but with the borrowed money, what happens? You are making other people to be rich. So you need to avoid making other people to be avoiding buying ostentatious goods or expensive goods. Then you need to avoid making other people rich by going for credit facilities, by going for loans. I always say one thing: if you don't have any tangible thing you want to do with that money that can create a compound effect for you, that can create more money for you, then you don't need to go for that money, or you don't need to go for that loan at the end of the day. Then you need to know that you need to go for what I call delayed gratification and a decade of sacrifice. What is a delayed gratification? A delayed gratification is simply saying that when you invest the money, you don't take that money immediately, but we invest that money over time, allow that money to compound over so many years. In other words, you allow that money to go through a decade of sacrifice. That's what I call a delayed gratification. That is those things that you are supposed to buy at that immediate time. But now, because you are investing the money, you don't buy those things. You rather invest that money. Then in the future, you can buy those things. That's what we mean by delayed gratification. So a decade of sacrifice is actually what you need. Decade of sacrifice is that when you're actually investing your money, you don't need to invest for a period of 1 year, 2 years, 3 years. It's actually a decade of sacrifice, at least a minimum of 10 years. After 10 years, your money will have compounded and that money will have grown up exponentially. That money will have compounded over time. Now, let me give an example. Let's say, for example, you are actually investing 1 million naira every year. After 10 years, that makes it 10 million naira. After 10 years now, because right now, investment portfolios are actually paying about 20 point something percent. After 10 years, that money is going to be 23 million naira. So you can actually retire with 23 million naira at the end of it. That's a big amount of money. You can do better than that. You can even invest more than 1 million naira per annum, like most people do. They are making money every day. So what is built by compounding effect of what? Of investment. So your investment will compound over time. So whichever investment you're actually choosing at the end of the day, whether you're actually buying shares or buying stocks or you are going into a rental estate, or you are buying, going on into one business or the other, that can actually fetch you what I call passive income. Your money is going to compound at the end of the day. So the more you invest, the more wealth you are going to build at the end of the day. So you need to figure out how to make money by creating what I call multiple streams of income. Because capitalism now, because of the high level of inflation in the country, you might not necessarily depend on one job alone. So you need multiple streams of income for you to be able to survive in this economic situation. And that's why we're talking about financial education here. So you can see that you actually need financial education to travel through this economic ulubalu. Because a lot of people are actually complaining now that the economy is very hard, the economy is very harsh, the economy is this, the economy is that. But if you can actually go through the decade of sacrifice and actually invest your money, you are going to discover that after 10 years, you have not arrived. And those things that you cannot buy or purchase or consume when you are actually investing your money, you can buy them at the end of the day. That is what investment is talking about. So if you're actually investing today, your money is actually compounding over time. And the beauty of investment is that you earn money every day. You earn money every day, depending on the kind of investment you are doing. For example, if you are into what we call money market funds, you earn money every day. By 12 o'clock now, I'm going to earn my own money. So I'm going to earn the money for Saturday, I'm going to earn the money for Sunday, and I'm going to earn the money for Monday. 365 days, I'm making money for myself every day. Is that not good? You can do that, and you can do much better than that. To actually create more wealth, sometimes you need to cut down on your expenses. A lot of us will buy things that we don't necessarily need, and those things are actually affecting us. We buy those things that are actually creating holes in our pocket. So for you to actually survive in this economic situation or economic circumstance we find ourselves now, then you need to cut down on what you are buying. You need to be financially disciplined. You also need to work to systemize your money. Systemizing your money here simply means that you need to divide the money into spending, savings, and the investment. Spending, like I always say, is the money you spend on every day. Then savings is the money for emergency. Like for example now, people are making a lot of mistakes when it comes to savings. They'll tell you that they are saving for retirement, but that is not the way it's supposed to be. Saving is actually for emergency. When life happens, you actually depend on that money to actually survive that period of imbalance that you are actually experiencing at that particular time. And that is what savings is actually meant for. So savings is not for retirement. Retirement is talking about investment. You invest your money, your money compounds, and you make more money at the end of the day. And when you are making that money, you are actually reinvesting that money. So savings is actually for emergency. Then investment now is actually the one that you actually set aside. The money that you are not using at that particular time, you set it aside and you watch that money grow over time, and you watch that money become compound at the end of the day. So after collecting that money, you need to systemize your money into savings, investment, and the spending. Spending is the one you want to spend on a daily basis. Savings is the one for emergency. Investment is the one for wealth creation. So your goal, or what should be your goal now, should be to buy more assets. When you buy more assets, you are creating more wealth for yourself. So don't put all your money on liabilities or things that will not create value for you, but rather invest your money into more assets, into something that can build more money for you into something that can build more wealth for you, into something that can build more money for you. Because life is not very easy. I need to prepare for retirement age, because old age is not very easy. When you are getting old, those things you are actually doing when you are very young, you might not be able to do them again when you are actually old. And when you're actually old, you actually need something that can actually sustain you. And what is that thing that can sustain you? Your investment. Because now that you're getting old, you are dependent on your investment. Every month you are getting something to eat. You don't need to depend on anybody. You don't need to go through depression. You don't need to go through health complications or anything, because the money is already there for you. All you need to do is to be paying yourself at the end of every month, because your money is compounding now and you are paying yourself every month. So you have nothing to fear, or you have nothing to worry about. And that's what investment is talking about. So the economic system does not want you to know all this. Or the economic system does not want you to profit from all this. The economic system is rather very happy when you are not financially educated. So for you to be able to understand more of this, you need to watch more of my videos, so that you can be able to dissect, you can be able to assimilate, and you can be able to digest all of them and act on the right thing to do at the end of the day. Nothing is too small, it's not yet too late now. You can start investing even at 35 or 40 years or 30 years old. You can start investing and invest for the next 10 years, minimum 10 years. And by so doing, you can actually create what I call generational wealth, from one generation to another generation. When you actually invest, when your children are going to school, you don't have to stress yourself again, because money is already available. Because going to school now in Nigeria is very expensive now, very expensive. So if you are not prepared for all this, you are actually preparing to fail. So if you want a very brilliant future for yourself, if you want a future of financial independence, then it is time for you to start investing now. No matter your age, you can still invest something today. So don't spend all that money. Don't spend all the money on liabilities. Don't spend the money on things that cannot create value for you. And don't borrow that money from the bank when you don't have anything tangible you want to do with that money. Because a lot of people actually, they like taking money from the bank. They like living in debt from year 1, year 2, year 3, living in debt all their lifetime, which is not a very good one. At the end of the day, you might not be able to depend on anything at the end of the day, because you have actually spent your tomorrow today. So avoid spending your tomorrow today by investing into the future. There are so many investment portfolios that actually invest your money into. You can buy shares, you can buy crypto, you can buy stocks, you can buy mutual funds, you can buy ETFs, equity trust funds, you can buy index funds. There are so many of them you can actually invest your money into. So all you need to do is to meet your financial portfolio investment manager that will put you through on where you can actually invest your money and begin to make money every day. I actually believe that you actually gain something from this video. If you have gained something, now it's time for you to subscribe to this channel. Till I see you next time, thank you so much and God bless you. Bye bye.